What's going on, everybody? This is Kenyon Hackworth from Healthy You, Wealthy You, where my focus is on improving health and building generational wealth. 2022 has gotten off to a rocky start, according to the experts, in regards to the stock market, because stock market prices are going down. People are worried about a stock market crash and a bear market. But myself, I really don't concern myself about a stock market crash. Why? Because I'm not selling my businesses. See, when you own great businesses, you don't have to worry about temporary stock fluctuations. Benjamin Graham talked about having a proper attitude towards the market. The stock market is here to serve you, not to instruct you. And if you own a stock, guess what? It's going to go down sometimes. But the key is always to buy great businesses. Let's look at this. Let's take a look at this clip from Warren Buffett, and when he was asked a couple of years ago about stock market prices going down.
Very quickly, let's talk a little bit about the fact that the market's down almost 800 points this morning.
Yeah.
Concern for you?
Well, no, that's good for us, actually. I mean, we're a net buyer of stocks over time. And just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. So when stocks are down, we're going to be buying on balance. And who wouldn't rather buy it, at a lower price than a higher price? People are really strange on that. I mean, because most people, most of your listeners are savers. And that means they'll be net buyers, and they should want the stock market to go down. They should want to buy at a lower price. But they have that feeling that they just feel better when stocks are going up.
You see, this is why you don't have to freak out whenever there's a pullback in stock market prices. A correction is whenever there's a 10% pullback from the all-time high in the stock market. And a bear market is when there's a 20% pullback from its all-time high. But you don't have to be afraid of stock market crashes. In fact, a bear market is a lot like giving birth. It's painful when you're going through it, but after it's over, you get to experience the joy of watching the growth. I have no idea what I'm talking about in regards to giving birth. But anyway, you don't have to be afraid of stock market pullbacks. Now, let me give you an example dating back to 2018 from my own portfolio. All right, on August 20th, 2018, I bought Home Depot, about 21 shares of Home Depot. The price of Home Depot at that particular time was $196 per share. And this is back when Charles Schwab used to charge $4.95 per trade. And of course, you can see it was $4,000 for that particular purchase. Now, this is when I was selling off the rest of my index funds and my ETFs, and I went strictly to individual businesses. So I've been about 4 years now, and I only invest in individual businesses. I don't invest in any funds, but we'll get to that later. Only individual businesses. And after I bought Home Depot the first time, there was a stock market pullback. In fact, in the last 5 years, there's been two major stock market pullbacks or corrections. The first one was October 1st, 2018 to December 24th. And you see, when I bought Home Depot the first time on August 20th, from there to the time that pullback ended on December 24th, my Home Depot shares went down almost 20%. 20%. But that didn't freak me out and make me want to go out and sell all my shares because I thought I was going to lose all my money. No, I looked at Home Depot as a better buy because I could buy more shares at a cheaper price. In fact, you can see as I sold off the rest of my index funds or ETFs on November 2nd and November 20th, I was able to buy Home Depot for cheaper prices. You know, at that particular point in time, it was $181 a share on November 2nd, and I bought another 18 shares at $170 a share on November 20th. So if you're buying great businesses, you can buy these businesses, and as the stock market pulls back, it gives you an opportunity to be able to buy more at cheaper prices. Now, if you're invested in mediocre businesses, then that's a different story. So, as Philip Fisher said in his wonderful book, Common Stocks and Uncommon Profits, you should only buy outstanding businesses. All right, so now during this pullback, now I'm going to show you why I don't really concern myself with stock market corrections or stock market pullbacks. During this time frame from October 1st of 2018 to December 24th, during this pullback, the S&P 500 was down almost 19%, and my portfolio was down right at 22%. The second big pullback or major correction or bear market was a short-lived one. It was during COVID. It was February 20th, 2020 to March 23rd. As you can see, the S&P went down 33%, and my portfolio was down 33%. So I know that the next time the market goes down 10%, or 20%, or 30%, or 40%, whatever, my portfolio is probably going to go down the same amount of time, or same amount. 10%, 20%, it's going to match that. However, during that same time period, from that 5 years, from January 1st, 2017 to the end of December 31st, 2021, even with those two pullbacks, during that 5-year time period, the S&P averaged 19.7% rate of return, and my portfolio averaged almost 26% rate of return. During that 3-year period, the market was up 26%, and my portfolio was up 32%. So when you buy outstanding businesses and you just allow them to compound and allow them to grow, then you would be a lot better off than trying to trade in and out of markets. So this is why I don't really concern myself about stock price depreciations and stock market crashes. Number one, I'm not selling my businesses because I believe that I have a group of great businesses that are all working together to build wealth for myself and my family. And also, the businesses that I own perform at a very high level. And for people who say that nobody can match or beat the market, if you have certain businesses that perform at a high level, then your portfolio can only return in a manner consistent with the businesses that you own. So the higher the quality of the businesses that you own, the more these companies grow their earnings, their revenue, their cash flow, and you buy them at attractive prices, then your portfolio is going to match what you do or what the businesses do. So continue to look for great businesses. Don't freak out when there's a pullback or when stock prices depreciate, especially if you're buying great businesses, okay? Don't buy high stocks. Buy great businesses that you can own for a long period of time. Oh, and if you're new to the channel, hit the like button and subscribe, because I'm going to keep bringing you a lot of great information that hopefully you can use. Now, there is no one way to invest, okay? I'm just giving you what I've learned from studying the likes of Warren Buffett and Peter Lynch and a lot of other great people. So I take the information that I learned, I've gotten my own flavor, and I would suggest that you listen to a lot of different people. You can learn, you can grow, and you can invest, and you can build wealth. All right, so I will talk to you soon. Peace.